Hello, friends. Welcome to the Weekend Investing Daily Bite. We are not doing the Daily Bite series on a daily basis, but it is branded as Daily Bite. So there has been a lot of queries from various users in terms of what is our view in terms of what strategies have done well and to present this data. So we thought we'll use this opportunity to present to you out of all our 11 strategies, which are the top strategies that have done well in the last 1 year, which have been the most popular ones recently. And maybe some insights can come out of that. So this daily bite will be dedicated towards the weekend investing strategies that have done well. We also want to remind that this week till 12th of March, Sunday, we are running a very special campaign. We have collaborated with LearnApp, one of the top education portals, online portals. And if you come into weekend investing using this code, we will basically share the entire LearnApp library. LearnApp will share their entire library with you for 30 days. So there's a plethora of good courses on LearnApp taught by various market gurus, and this is not just momentum. Of course, momentum courses are also there, but you can look at a lot of other knowledge base out of that. I think if you directly go to LearnApp and take a membership for that, it is worth some 5 or 10,000 rupees. So all that value is coming to you on a free basis for 30 days if you come into weekend investing as a subscriber. So you can see here a lot of courses are there on LearnApp, and in this video we will compare the continuous CAGR and 3-year rolling CAGR for these four strategies. These four strategies have been the best performing strategies for us. MI Evergreen, MI 35, MI 20, and MI 30. And I'll briefly touch upon each strategy also. So MI Evergreen is a strategy that combines the CNX 200 universe, so top 200 stocks based on the index CNX 200. We pick 20 out of those stocks and combine it with a hedge of gold ETF. And this is rotational in nature. It'll rebalance once a month, and at the end of the month, if in the rebalance it is found that one of those 20 or two of those 20 stocks have gotten out of flavor, those they will be removed and new ones will replace them, and they will be equally weighted each month at about 3.75% allocation for each stock and a 25% allocation rebalanced to the gold ETF. Now, this is a continuous excess CAGR. So you can see that since January 2020, it has had excess, continuously running excess CAGR in the 5, 6, 7% range. Prior to 2020, from April 16, the excess CAGR was kind of plus or minus a few percentage points. So it was in line with the underlying index, but since 2020 it has taken off and given a better return than the underlying index. And this is a 3-year continuous sort of CAGR here. uh, Again here, this is 3-year rolling CAGR excess. So again, till 2020, this was muted. So it was pretty much in line at any point of time. If you're starting and holding on for 3 years, 16 to 19 would have been at 0 to minus 2%, uh, versus the benchmark, versus CNX 200. So couple of quarters it would have underperformed, and then since January 20 it has overperformed. So last 3 years, for instance, it would have given you about 12% higher return than the CNX 200, which is reasonably good when you look at only large cap returns. So large cap returns, if you are able to get a few percentage more than the benchmark, that is quite good. So this is depicted last 9 months. The returns have been plus 28%. versus 13.5 on the CNX 200. And that's how the MI Evergreen has stacked up. And all this information is also available on weekendinvesting.com. You can compare one strategy versus benchmark, one strategy versus another strategy. You can put three strategies, up to three strategies in a portfolio, and say, I want to give 50% to MI Evergreen, I want to give 25% to MI 25, and I want to give 25% to, let's say, an NF10. What would be my outcome in terms of the past results? MI20 is another good strategy that we have. It essentially invests only in small and mid caps from the small and mid cap 400 index. So there is small and mid cap index which is comprised of 400 stocks. This strategy will select 20 stocks out of that index and invest it on an equal weighted basis to start with. And then each week it will rebalance. If some stocks have not performed well, it will remove those stocks, it will bring new stocks in, and that's how it will keep rolling like that. And you can see that on a continuous CAGR basis, the excess CAGR generated has been in the region of 4 to 10, 11% in the last many years. So this is actually the best strategy to start with. It is very reasonably priced. It is meant for lower capital, and this is a strategy that can really do well. And on a 3 year rolling CAGR basis, you can see that it has always performed since the start. If you see from 2016 to 19, 17 to 20, 18 to 21 period, so on and so forth, it has always performed on a rolling basis, 3 year rolling basis, much above the benchmark, and averaging between 12 and 18% sort of range in the last many years in terms of the CAGR excess. On a chartical basis, last 9 months, it has done 29.9% versus 20.4% on the mid and small cap index. MI35 is a pure small cap strategy. It is a very well diversified strategy. It only selects stocks from the CNX small cap 250 index. So there is an index which only has small caps, the first 250 stocks in the small cap part, and MI35 will select 35 stocks from that 250 stock index, and it will rebalance them on a weekly basis. So out of those 35 stocks, a couple of stocks, one stock, two or three stocks may turn out of the index on a weekly basis, and some new stocks may come in. There are many times where there is no change also. This also, as you can see, is a good beater of the benchmark. Since the last many years, it has beaten the continuous CAGR excess from on a double digit basis, and this has been very very consistent in terms of its performance. On a rolling basis also, you can see that on a 3 year basis, the excesses have been almost in double digit returns ever since. So last essentially it is at about 13% is where the meter is right now on last 3 year basis, on a 3 year rolling CAGR basis. And the last 9 months here, it has done reasonably all right at 25% versus 18.7. And let me also qualify that the last year and a half has been of time wise consolidation. The market is taking its time to absorb the excesses of the past rally, and it'll do go through a time consolidation, and then maybe leap into a next round of the next leap up. And that's how markets move in terms of lumpy moves every few years. So if during the period where the markets are catching their breath, the markets are sort of building up that base based on which they will jump again, if during that period also, if your strategy is able to beat the benchmark, I think that's a very very good sign. MI30 is one strategy which has been on since 2016. So it was the legacy strategy along with MI25 and MI50. This invests into up to 33 stocks from the CNX 500 universe. So top 500 stocks is what is the universe here. It's an absolute momentum strategy, so it goes to cash if there's deep distress in the markets. So from that perspective, it's a bit different from MI20, MI35, MI Evergreen, and some other rotational strategies. But nevertheless, this has done reasonably well. Uh, in the earlier part of its existence, it did clock a lot of excesses when we had that mid and small cap rally in 2017-18. But ever since then, it has had a single digit excess CAGR over a 3-year period. On a rolling basis, this has been somewhere just about upwards of the benchmark, currently near 6 or 7% versus the benchmark. But I would say this has been a sort of a very stable strategy, trying to mimic the best of CNX 500 as strong stocks from large, mid, and small cap index put together. So the outperformance is not dramatic here. It is very much pretty much in line. But once we have that momentum going in the market at some point of time, this will definitely prove its worth at that point of time. So again, reminding you that there is a small window for this offer till 12th of March. Please use this code. You'll get some discounts on the weekend investing strategies, but the biggest part is that you get a full access, a sort of unhindered 30-day access, free access to the Learn App's entire library, and it has been a quite a feat to get this collaboration going. So I would like as many people possible to use this collaboration benefits and add value to your market learnings. Thank you so much for watching this daily bite, and I'll see you in another one.